Joining us is JPMorgan chief U.S. economist Michael Feroli. What did you make of retail sales? How important are they?
Yeah, it was hot, definitely across the board, not only in March, but the revisions to January and February were pretty favorable. So overall, looks like the consumer, which, earlier there were some signs that maybe we were softening at the beginning of the year. Now that doesn't look to be the case. So I do think it's pretty important, particularly on the back of, some pretty strong employment numbers we saw 2 weeks ago. So it will make it a little challenging here for the Fed to cut, particularly with these inflation numbers.
What is your latest thinking on that? Are they able to cut this year?
Right now we still have them cutting in July, but I think if it's going to be tough, if they don't get a cutoff by then, it may have to wait until December, given I don't think they want to start a cutting cycle before this election. So, still a lot of data to go between now and then. The latest data clearly would not suggest easing, but we'll have to see what we get going forward.
What level? I started with the 10-year yield. It's 4.6. The dollar's also strengthening after that retail sales report really took off against the Japanese yen, waiting on intervention there. Mm-hmm. But at what levels for dollar, for bonds, do we get to where you rethink the economic forecast?
Look, I think we don't want to get too jumpy on day-to-day moves here. But this was a concern among, some policymakers that we hadn't really seen much tightening in financial conditions. I think now that we're rethinking the Fed, we're starting to see some of that tightening come back in, which is, I think, what we need to have, a soft landing back on. Well, we don't need to have a soft landing back on track, but I think it would give us a little more confidence after some of those stronger numbers that growth is going to ease going into the second half of the year, consistent with continued disinflation.
Yeah, there is this thread, Michael, that excess savings has been worn down for at least a large part of the income spectrum. Signs of some softening in the labor market. After-tax income growth may be slowing. Is there a sense that how much longer can we get retail sales prints like this?
No, I think that's fair. And, I'd add to some of those concerns. We had seen things like credit card delinquencies rising, auto loan delinquencies rising. So there may be consumers could be stretching a little bit here, and certainly saving rates are a little low. And I think that's one of the reasons to expect some moderation here, which is why many of us have expected moderation, which hasn't shown up. And some of that may just be that there is sort of this post-pandemic enthusiasm for spending has longer legs or longer life than we had considered. So that behavioral aspect certainly could be at play here. And it is a risk, perhaps, that at some point we get into a situation like we saw in the beginning of the century where consumers overstretch themselves. I don't think we're anything close to that magnitude, but that is a narrative out there. I don't really not buying it wholeheartedly, but there is an element here that certainly saving rates look pretty low given all the spending.